Ladies and gentlemen, open banking pioneers, hello and thank you for joining us around our campfire. Before we dive into today's session, there's a couple of things I'd like to update you on. If you haven't checked out our new blog, please do so via our website. It's something we'd very much like you all to get involved in. We're creating an authoritative place for the industry to share their data and their insights. Giovanni, who's our head of blog content, he's actually just relocated home back to Lake Como, is the first person to have a PhD in open banking. Now, he'll be driving this, so please do reach out to him if you'd like to contribute. And we will be continuing this conversation. This is a very important conversation to us at OBE over on our blog. Now, it's our mission to be red hot relevant and keep you updated on the topics that really matter to you, which is why we're actually having this conversation today. So please do check out the poll on our LinkedIn page to help us shape future campfires. Now, looking at the audience, I can see this conversation has attracted some new pioneers to the conversation. So a few housekeeping points. You can all see that at the side of your screen, Karina graphically recording this conversation. And it's something that we will share through our social media channels. And we actually also post what I think is a really cool piece of content. It's her drawing speeded up. And at the bottom of your screen, you can see a QR code. And for those that know me, you know what's coming next. Please lift your phone. It's super, super easy to scanning that QR code, see how easy it is to make an open banking charity donation. So talking of doing your bit, we've all seen the impact that humanity has had on our environment, whether it's from the David Attenborough programs or the new amazing Sky Daily Climate Show. We now need to reset, this new normal, and it's particularly timely as we start to come out of lockdown. So today we're going to be discussing It Pays to Go Green, making open finance mainstream. At OBE, we believe that open banking, as it's moving into open finance, this provides an incredible opportunity to inspire innovation through sharing high quality data, obviously securely and with consent. That's what open banking is all about. But this should drive exceptional use cases. So today's campfire is all about inspiring to innovate. How with the power of data and innovation, we can all do our bit to make this world a greener place. How cool is that? Now, we've Richard Peers, our host for this conversation. You may well already know him, and you may well have read his blog on FinExtra around sustainability. He will be talking with two exceptional fintech entrepreneurs. We've got Shruti from Novus and Josh from Sugi. Now, this is a conversation we would love you to join in. So please do ask the panel questions. You can see Slido at the side of your screen. Before I hand over, what I will tell you is that I learned so much from this briefing session. It's a fascinating topic. You're in for a masterclass and you're going to hear new terms. Greenwashing was new for me. What's all that about? Well, you're about to find out. I'm absolutely delighted to introduce you to Richard. Richard, I wonder if you could start by sharing a little about yourself and your journey into sustainability. It speaks volumes about values. Over to you, Richard.
Thanks very much, Helen. And good afternoon, everybody. Good morning, depending where you're dialing in from. I won't bore you with too much detail on me, but just long story short, it probably started when I was very young. I was very lucky. My wife worked for a safari company, so we had no money, but we got cheap holidays, and we were out in places like Borneo and Africa and everywhere else meeting conservationists, 30, 40 years ago. But I kind of put that aside. That was my leisure life. And I went on to, as we all do, work. And I spent the majority of my time, 23 years, at Microsoft. Towards the end of that time, I was globally the lead for our financial services industry strategy team, looking after a particular area of open banking, fintech, and core banking vendors. So we worked out, what Microsoft was doing, what was happening in that space. I was based in London, and so went through that whole cycle, emerging from all the team that were involved in Level 39 and all the rest of it. So there was a point when I went along to a conference and I saw people talking about sustainable finance probably about 6 or 7 years ago, around the time that Mark Carney and the Financial Stability Board started to really raise the topic of climate change and how finance was going to be involved in that. And I thought, well, this is the moment when I can sort of really bring my personal interests into work, and I can combine technology, financial services, and conservation. So at that point, I did a quick run around my team at Microsoft. There's a lot of people that cared about this subject, and we built a virtual team so that we could actually start to build up a playbook around sustainable finance. So that was probably how I got into this, and it's been quite a few steps since then, Helen. You may be on mute, Helen, but I'll carry on, shall I?
No, please. It's absolutely fascinating. I would love you to carry on. If you'd like to introduce the panel, let's kick off and let's get this party started.
Okay, absolutely. Well, look, we're really delighted today to be joined by Shruti. Hi, Shruti.
Hi.
Give us a wave.
Hi.
And Shruti, tell us quickly the organisation you're from and what your title is.
Yes, definitely. So my name is Shruti, and I'm the Chief Growth Officer and one of the co-founders at Novus. We are a sustainable banking app, and I'll tell you more during our chat later.
Thanks a lot. And Josh Gregory.
Hi, Richard. Thanks. I'm founder and CEO of Sugi, which is an impact analysis platform, which allows people to understand the impact of their portfolios.
Amazing. So we were talking beforehand. We thought it might be useful if I just gave a quick segue between what is sustainable finance and what's that got to do with terms like ESG, and obviously what it's got to do with open banking and open finance. So, in a nutshell, we thought we'd look back and say, as all of you will know, open banking came from the competition market authorities, looking at the 2008 crisis and the too big to fail, and saying, how can we actually come up with some approaches so that we put more innovation in the market, which has obviously led to the FinTech neobank boom that we're all very familiar with now. But at that time, one of the key building blocks that was needed was obviously, as we know, the need to open up data that was held behind the walls and moats of the banks and make that available to the FinTech entrepreneurs. And the focus of that obviously being around PSP and ASP, so that we had aggregation and payment as our focus in the retail space. So that focus on data is a key thing that we're going to come back to. One of the key things around that was obviously there was a resistance, quite rightly, in the first instance from the banks about giving up access to this data, needing to know that it would be managed securely, that authentication, permissions, etc., were all very well governed. And so we went through the whole open banking implementation entity, the PSD2 initiatives, secure customer authentication, which was, we all know, kept getting kicked down the road on that one, but ultimately resolved. And we are where we are today now, which is this innovation stream with core banking vendors having marketplaces with many different apps on them, allowing integration into core banking systems and allowing access for banks to that level of innovation. So if that's our history, and where we get to now is we've got the kind of the rails, the gates and the checks in place for open banking, we now know that what we're doing is we're moving on to open finance. So moving from payments and aggregation in retail, but moving to small and medium banking, commercial banking, and ultimately into investment and wealth. And this is really where the intersection with ESG starts to arrive. Now, ESG, environment, social and governance, is an area where banking, investment, lending, payments is now focusing, trying to basically redirect capital from standard projects, but into ones that may be aligned to the United Nations SDGs, but certainly are financing green projects, if you will. And so we think that one of the challenges in the world of ESG, sustainable finance, back to data, is that there is a lot of people who've put a green wash over their existing portfolios and funds, and that green wash is basically saying, yeah, give me your money, I will invest it for you in a green way. And this has become a source of much sort of challenge, an issue within this part of the industry, because we want people to know that their money is going to very high quality projects. So this question again of how do you prove, how do you evidence that your investments are reaching, the water is trickling, if you like, down to the stream that you wanted it to end up with. This is a question of data. So it strikes us that if you look at the way that we fix this, it's by shining light and innovation in on that data, and then proving independently and through verification that the funds and portfolios you're investing in are truly making a positive impact. And so therefore we think that the rails of APIs and the data sources and the provenance, etc., that is available could well be released as a source of innovation, an pipe of innovation to innovators like those that we have with us today, that can actually create transparency and light, which allows us to know that our investments are being handled for us in an accurate way. So there's our segue. In summary, trying to join open banking to open finance to data to ESG and obviously sustainable finance, which links to hopefully an improved world. With that, which I hope at least gives you a bit of a sketch of where we've come from in thinking of putting this forward to you today, I thought I'd open up to Josh and Shruti. Josh, first of all, hearing what I've said, what's your sort of reaction to that? Would you agree? Would you clarify, with your own perspective?
Yeah, I think you're correct in terms of how things with ESG are moving. So, I mean, in the past year, we've seen this massive increase in sort of public awareness in ESG. I mean, from very low levels towards kind of a significant minority, I think would probably be familiar at least with the term, if not necessarily with what it means or what it actually stands for, which I think is a problem, which I'll get onto. And I think there's a couple of reasons for that. There's the fact that during the pandemic, some of the financial stocks and funds and trusts that are focused on ESG have come out rather well, and there's been a lot of press around that. So the financial press has been talking a lot about ESG, and then you've got the sort of mainstream media talking about ESG as well, in terms of more kind of like how can companies put back into the world what they've taken, and there's not just E, it's the S and the G, it's the social and the governance particularly. And then you've got kind of the COP26 that's happening this year, and kind of the re-entry of America into Paris Agreement. So I think there's a general wider awareness. Oh yes, and also because of the pandemic, there's this kind of idea that people are more interested in the world around them and kind of care about these issues a bit more. So I think there is this awareness of ESG, and I think the problem is with this lack of definition and this kind of potential for greenwashing, there's this problem that it becomes actually just a buzzword. It's just a label that especially companies just slap on what they're doing to say, oh yes, we're doing a good thing. But also in the investment world, I think a lot of people will look at what the ratings are out there, like, sort of blanket ESG ratings. And there's a couple of things that kind of just basically get tied up within that ESG rating, which, sort of the environmental, the social and governance, they all get put together. So I think there's a lack of clarity, and with that lack of clarity, there's a potential for two kinds of greenwash. There's that first type of greenwash, I would say, which is intentional. So you're a company, you're an asset manager, and you're kind of disguising maybe some aspects of your investment, not having particularly good environmental or social governance metrics, with an overall rating which comes out quite well. And then there's the kind of lack of clarity type of greenwashing, which I think if you talk to the regular person about what they would think of greenwashing, this is probably more important, which is you see a rating and you don't really understand what it means, and actually it kind of hides things which they value, and kind of isn't particularly useful. And I think that goes back to the point about data. So what open finance is really good at is channeling data directly from institutions towards the individual in a personalized way. And I think so. What we're doing at Sugi and other companies are doing is trying to bring that information in a kind of relatable, personalized, so people can sort of check which ones they're interested in and maybe disregard other ones. So basically, yeah, kind of decreasing that kind of barrier of information.
Cool, that's great. I'll come back to a couple of points there maybe, but Shruti, what's your, just from that opening statement and what Josh has said as well, what's your sort of point of view on this, and how are you seeing the world of open finance meets ESG?
Yeah, so especially after the post-pandemic world, I think has seen a drastic shift in not just the way consumers would invest their money, but even consumption on the day-to-day basis. Like a recent Accenture report on BBC that was published said that over 60% of the people in the UK said that they think more about how environmentally friendly their product is now compared to pre-pandemic. So it has just been a time of reflection also for everybody in the UK to not just think about how we are investing our money, whether it's going for a good purpose, but also whatever we consume. How can we make better choices there? And we have seen there's been so many movements around shopping locally, supporting local businesses, that we are seeing like just that drastic shift happening, very accelerated by the whole pandemic situation. But I think I agree with Josh where the S and G aspect of ESG is becoming more and more important. So far, we were talking about just in the environmental aspect of the carbon emissions and the pollution, but the social aspects, the movement that we see, like whether it was Black Lives Matter or Me Too movement, there's just so much more awareness and highlighting that's happening on the social front that the companies have to look internally now and see how they can incorporate better labor practices or better working situations to make sure that they score well on the S and the G front too. And data continues to be an issue. There is no standard framework to measure companies within the ESG framework. And there has been a lot of conversations around companies gaming the system and choosing to report only pieces between the ESG metrics, which are more favorable to them compared to a more exhaustive and more standard framework. So I think that's where the main issue is. But hopefully with the increased focus from this year and onwards, we will be seeing a much better standards adopted globally so that we have like a fair comparison to compare companies against each other. And open finance definitely will be helping even to an individual user being able to see, like right now in the UK, because I think open banking is not something that's available in all countries, but in the UK right now, open banking helps me see within one app what my overall financial situation looks like across different banks, but adding a layer of how my mortgages look across different banks or how my investments are invested across different industries, like having that level of transparency will definitely make me as a user ask more questions automatically. So that's definitely something that we are hoping that the world will move towards.
Yeah, and I think it's worth saying, isn't it, at this stage that there's always the hype cycle, and then the sort of trough of despondency and the plateau of productivity, if you remember that whole cycle. And we're definitely in a sort of a hype cycle here, and it's key, I think, that the fintech community gets involved to make sure that we get real to the plateau of productivity, if you will, really fast, because this is really important. I mean, S and G is super important, but ultimately, if we haven't got a planet to live on, S and G doesn't matter. And what we've got to do is to make sure that there was that fashion retailer in the height of COVID who was a sort of an ESG darling, who ultimately was spotted as being involved in fast fashion and supply chain, which was leading to social conditions in the Midlands, which was a hotbed of COVID. And so when that whole sort of cycle of supply chain was analysed, people said, well, how is this doing well in an ESG profile? ESG is obviously, nonsense. I think the point of it that people were missing is that, we care about this. We're shining a light on it now. We haven't got the perfect products and data in place yet. But it is a way of us actually resolving some of these big challenges. But there is work to do. Don't give up yet. Don't go to the trough of despondency. Let's all roll up our sleeves. Josh, what do you think about that? And then go further off for me, if you will, on maybe the role of open finance. Are we stretching it too far by saying that APIs and data and open finance can help?
No, not at all. So I think there is this tendency, and obviously Sugi concentrates very much on environmental impact, to concentrate on that kind of E aspect, and instead of the S and G, or to leave the research for other platforms to do that. But I think obviously open finance is very good at data, and it is quite easy to quantify environmental data as opposed to social and governance, where actually you're looking at kind of perhaps more value judgments or more nebulous ways of ranking companies or investments. But I think open finance can be extended beyond that kind of quantification aspect. And it's something I did want to talk about, which is how you can, as a shareholder or as a consumer with the company, how you can actually feed back. And open finance obviously has that ability, if we program it in, to have that kind of two-way flow of communication, which could really supplement the kind of social and governance aspects for companies.
Yeah, absolutely. And I particularly think that there's areas, such as trade finance, supply chain finance, where I don't know quite if they're in the remit of open finance as yet, but fundamentally they're sources of data that are moving through the financial system. And within that, obviously, you can look at, the flow of commodities, through the supply chain, geospatially, by organizational entity. It's that sort of data that, you can imagine a machine learning, artificial intelligence sort of fiend getting their hand on, and really be able to see patterns of flows through geographies and organizations, which tend to really sort of give you the evidence of impact perhaps on endangered areas, or slave labor, environmental issues in the Congo, that we're all aware of. Shruti, from your point of view, you look at it more from a sort of consumer behavior point of view. Here I've been looking at it a little bit transactional and core transactional banking point of view. Tell us a bit about the behavioral perspective that you look at this through.
Yeah, so I think if you ask an average person of what kind of sustainable journey they are on, the common things that they will talk about is around, preferred modes of transport, whether they take the train over their car, or they shop fair trade goods versus the regular goods or more sustainable brands. You don't think about banking right away or financial systems right away when it comes to sustainable choices. And we are trying to generate more awareness about how you choose your bank, where you choose to keep your deposits, has a big impact on the environment and the overall planet. And recently, like next week is Earth Week, and we have been as a company trying to spread more awareness in time for that. So we have built this impact quiz, and one of the questions on that quiz is, do you know which banks have the most fossil fuel investments still? And I bank with Barclays, and I was shocked to see that they are right on top there. So as a user, you don't ask these questions of your bank because you just assume that your money is not really getting used anywhere without your knowledge, but they are. So I think there needs to be that shift too, because that's such a big change that can make a much efficient carbon and much efficient carbon offsetting that you can do to your own carbon footprint just by switching your bank to a more greener bank is something that we want to tell people more about. And you add investments on top, and where you invest your money, again, if you're investing for projects that are better for the environment and the society, then you're basically amplifying your money's impact furthermore. So I would say just asking more questions from your bank on where my money is getting used is something that we all need to start doing more of, and not like just let them use our money wherever they want to.
Yeah, I don't know if people saw it, but there was, the sort of build back better phrase, which has kind of been distorted a bit. But, there was quite a lot of people in the sustainability community talking about that. And then the people that did Make My Money Matter through the pensions were throwing around statistics, such as, if you had to take one less flight, or drive less, etc., you would get 27 times more advantage, carbon advantage by actually investing, your money better, because you would be potentially helping transition away from carbon, or actually, not being involved in stocks and securities and lending that you're not interested in. It's a complex area because obviously, we're still, even though I passionately would love us to be zero carbon tomorrow, we've got to actually transition. We've got to take people with us, we've got to take jobs with us, economies with us. We've got to create the new roles. So, but your point, I think, is right. If you give the transparency, people can make the choice. I just want to go green now. That's it. Fine. You've got the choice now. You've got the data. Let's go to our poll, perhaps, if that's possible. We've got a question for you out there in the audience. We've been talking for a few minutes. And I think, we're interested to find out whether you think corporate and financial services businesses are taking ESG seriously. Maybe if we can see if that question can come out to you on the Slido.
We'll certainly make that happen for you, Richard. And we'll share the results at the end, but we'll also share them online afterwards through all our social media channels.
Fantastic. Yeah, it'd be good to see what people think. And it's I do a lot in this area, and there's a staggering amount of expertise out there, both really deep professional, been at it for 20 years, got PhDs, but also just passionate people who, a bit like me, are kind of Johnny come lately to it, but have really sort of worked hard at it recently. So I know it's a passion subject for a lot of people. Now let's move on a bit then. So what sort of projects are you guys working on, and what are you seeing in the green sort of open finance space that excites you, or you think has the potential to be a game changer? Josh, expand a bit for us on what you guys are doing.
So we're a platform that's available on iOS, which uses open finance to connect to people's portfolios, whether that's ISAs, SIPs, or even pension funds. So essentially any retail investment portfolio, to give people this analysis of the environmental impact of their investments. And I think when we came into the market back in November or so, it was really it was new to the space in the UK, especially, definitely, and perhaps sort of more widely as well. We have seen quite a lot of feedback around how useful that is for people, and we include things like we use a benchmark, a dynamically generated benchmark, to tell people how well they're doing for their environmental impact compared to, say, a notional example investment, which would be like the market average. We do things like that, and we also provide a list of comparison investments. So it's not just looking at stuff and thinking, it's also kind of giving people the ability to take action. And we're not a trading platform, so people still go back to their brokers with this information and kind of hopefully some ideas in order to, hopefully build a greener portfolio. But I think, it's a really exciting space to be in, the green fintech world. And we launched a temperature feature, which is the global warming potential of your investments, a couple of weeks ago, which got a lot of good feedback from the press and from the wider public. So there's obvious ways we can develop our platform, but I think the wider kind of green fintech space, I mean, there's so much exciting stuff going on. There's as you mentioned, the green neobanks are really spreading across Europe. I think the Nordics were sort of the initial kind of trailblazers in that respect, and then in Central Europe there's some really strong ones, and now in the UK, and obviously Novus is really great, and so I think it's a really hot space to be in. I can't really pick out any particular ones that I would necessarily pick to be winners, because it's a wide open field at the moment, but I'm really excited to see what happens next.
Yeah, absolutely. Can't leave our Dutch friends out, because I think they're pioneers as well, with people like Triodos Bank and the others, and the Dutch Central Bank, which is actually, somebody showed me recently, has done a paper on the effect and dependency of the economy on biodiversity and natural capital, which is, I think, the first one to do that in the world. So Josh, and I'll come back to you in a second, Shruti, but how do you get that temperature analysis on the portfolio? How do you do that? And are you using at this stage, open finance capabilities or open banking capabilities to help you achieve that?
Yeah, so our core platform is driven by open finance, and actually me hearing about the potential of open finance is what came to the idea of Sugi as an actual product. So we take people's investments and we basically use that and cross-refer it to our servers. And we have this huge database from S&P Trucost, which is one of the big 5 environmental data providers, which covers like sort of 15,000 companies or maybe 14,500 companies, I forget, which is pretty much the majority of the world listed market. I think it's like 95%. And we kind of mix things around and basically incorporate a bit of personalization. And also what we do to kind of decrease the greenwashing, as we discussed earlier, is we don't actually take kind of fund level information from the funds themselves or from ETFs themselves. We build up sort of synthetically what the environmental impact would be for the individual ETFs and funds using the data that we bring in. So yeah, I mean, open finance is key to our offering. I'd love to kind of talk more about it, but at the risk of blathering.
Oh, well, that's what we're here to do, but we're going to come back to you on that. So get ready for the next answer. I'm going to drill in even further. But Shruti, from your point of view, tell us a bit more about, you started to expand on it, but what's your solution and how are you also seeing the wider market of services and offerings around you?
Yeah, so we are trying to build a banking app that's made for the conscious consumer, but we want to provide more than just banking and really an all-encompassing solution to anybody who is either at the start of their sustainable journey or really into sustainability, to have the right toolkits to make decisions. So it starts with banking, where we try to combine payments with impact, where we give a portion of our revenue towards impact causes that a user chooses. So they can use it towards carbon offsetting, they can use it towards planting trees, they can use it towards saving oceans. It's up to the individual to choose what cause are they most passionate about and use these points that they generate for using our card for daily payments. But in addition to banking, there's also marketplace, because we do know that there is a need of a more organized way of exploring brands and analyzing brands which are truly sustainable. So we will be using our own frameworks that will be available for our consumers to read more about. But we will be evaluating brands across different verticals that will be highlighted in our app so that users can choose to try some new functionality out. In the long term, we do want to get into investing and become almost like a super app for a conscious consumer, but that's our longer term vision. We are launching our beta product next month, and that will be just the marketplace and the banking app with the impact piece that I spoke about. But yeah, like Josh said, there are so many competitors, not really competitors because we are not live yet and they are not live yet, but there are so many green neobanks that are coming up in the UK and in different countries. There are so many like carbon tracking, carbon offsetting apps that are coming in the market, investing like Sugi is doing. And we are working with one specifically that I wanted to talk about. It's called Ecolytic. They are based out of Berlin. They are the ones who are helping us calculate the carbon footprint information at transaction level. So a user of Novus will be able to see what every payment, like what is the CO2 generated because of that payment, thanks to the algorithm that they have got, that they're developing, and taking it to more banks also so that everybody can be more aware about their carbon footprint. But I think things like that just the presence of technology that can help us see data at that level is a good starting point to just spread that awareness in how our transactions drive impact.
So I'm sure people are figuring it out, but now that we've got open banking and you've got the APIs and the permissioned access, the consumer is therefore able to give authentication through your app to the bank to get their payment information, and then you're using that to actually work with your partner and your own capability to actually then overlay the carbon footprint impact of the consumer purchases. So for the first time, somebody actually starts to say, oh, I can actually see that maybe that thing I've been buying, which I'm ambivalent about, is good or bad, but it starts to nudge their behavior.
Yeah, and even like if you bought an air ticket for a short distance flight versus a long distance flight, you will be able to see that it's a lot more harmful to fly for short distances than long distances. So you would try and take the train for shorter distances, for example. So it's just these small behavioral things that a user is not usually aware about, but hopefully our app will be able to shine the light on these like small behavioral changes that do add up.
And I think you're sort of going on to what I wanted to talk about in terms of, you know, the consumer and their role in all of this. But, you know, I think it's there's often a debate about, you know, there's too much pressure put on the consumer, you know, to sort of wear a hair shirt and change their life. And you're either sort of buying into that, or you're on the other side of it, you know, which is nobody's going to take my freedom away from me. I mean, I think from my point of view, in terms of there's a systemic challenge here, obviously, and a lot of the problem sits on, you know, the way that policy, regulation, accounting, capitalism, etc., has just accounted for stuff, and excluding the impact on nature, and obviously, you know, diminishing the impact on certain, you know, communities and so on and so forth. So there is a systemic problem here, whereby we need to account for these externalities, as they're sort of called in economics, and we need to sort of weigh up the risk and the reward of investing or not investing in things, and take that into our sort of beyond GDP, and they talk about GEP. So all of that needs to be done, and all of that means there's a lot of heavy lifting needs to be done in education of boards and changing of systems and people and processes. So people go, well, so the poor old consumer, you know, they shouldn't be involved in this. But my view is the consumer, you know, fundamentally creates the pressure that makes the change to the policy and the politicians, which then affects the regulation of the corporate, which changes the corporate behavior. Do you subscribe to any of that? And you know, where do you really sort of feel that open finance empowering the consumer can add its weight into that particular sort of complex system equation, if you will? Shruti, back to you.
Yeah, no, definitely. And I don't know if you have read the recent Bill Gates book, The Climate Disaster, but one of the things, and there's a whole different debate about billionaires writing books about climate change, oh, great. So if you have read that, or if you're yet to get to it, it says that to actually get to net zero by 2050, everybody needs to put an effort, whether it's an individual or a government or regulators, companies, like everybody needs to pitch in. And yes, I agree that when you started at an individual level, you expect a lot more from your government or your society to sort of help you make more impact. Because if I am taking the effort of wearing the same t-shirt over and over again, I expect the company that I'm buying it for to pay their labor fair minimum wages at least. So it is definitely asking more of the companies that we buy from, and also from our government, to give us, like, if I have to install a solar panel in my house to be more energy efficient, then I need the subsidies or the support of the government to make it affordable. So it has to happen at every level. And I was recently I was listening into the COP summit, like that all the world leaders were a part of, I think, last week. And it was quite interesting when the Indian minister, I'm originally from India, but the Indian minister was like, you can't ask people in India who doesn't even have proper income to make green choices, because that's like so high level. So countries like UK have to lead the way. And the government has to show how to build a system where it can be green by making sure that we have the infrastructure. And in the case of open finance, again, like, for us to know where the gaps even are in our current investments and our money, like, we won't be able to know the gaps without proper data. So that's like step one, is to provide better quality data and more unified data across different banks and financial institutions.
I mean, this just listening to you, I mean, this might be a sort of too simplistic a sort of a anecdote, but I was very lucky. I went through for a lovely tour through India and, you know, up into the Rajasthan and everywhere else. And what was clear to me was actually how environmentally conscious, you know, just you know, people in quite poor communities in India and villages, etc. are. They literally are using, everything and recycling it, for fuel, be it dung or whatever it might be. But plastic is this one thing they don't know what to do with, and so it gets taken to the outside of the village and burnt, and obviously that creates horrible toxic fumes. And yet there are people like the Plastic Bank out there who are saying, no, gather together the plastic, we'll give you a payment for that, and then they take it back and they turn it into a reusable plastic. But those sort of projects, actually really struggle to get financing because they seem to be more on the philanthropy than they do in terms of a long-term investable project. So I think it is incredly people do want to involve themselves in this if they're given the choices, but the choices need to be given by being financed actually, and helping public-private partnership deliver these services. Josh, sorry, I digress there on my holiday journey, but the question back to you really about the role of the consumer in all of this.
Yeah, I think you've really hit the nail on the head around this kind of lack of agency that people feel in terms of like just seeing these huge problems that we face, like world environmental problems. And I had a career in the environment before I founded Sugi, and this is just something that I always busted up against when I was talking to people that I knew. They're like, yeah, but what can I do? Like, even if I recycle, even if I stop driving, like it just makes no difference whatsoever. And from a financial perspective, I mean, specifically, it's like, there's advice out there. Should they be selling all their investments and buying, just impact funds, which are recommended in the newspaper? Or should they be, phoning their broker and saying, oh, I want to be involved in this shareholder vote so I can stay invested, but I can, have a voice to tell the company what to do? Or should I just sell all my investments because actually every investment has an impact and I shouldn't be supporting any companies? Like, it's just this kind of throw your hands up in the air kind of agency thing. And I think it also rolls over to how kind of green finance and kind of the general agenda has been driven by big corporates and institutions as well, where the sustainable finance frameworks are all kind of driven by these sort of closed door conversations between large institutions and policymakers. It kind of puts people off. It's sort of a couple of years later it all comes out and it's like here is the regulation, and it's all kind of slanted towards institutions, or there's kind of a delay that's been requested so that they can catch up, but actually that's not very good for the environment, and it's all very off-putting. So I think the key point is, and it's repeating what both you and Shruti have pointed out, which is to put that power in people's hands, where actually they can start making greener choices on a regular basis, and taking power away from the gatekeepers. And that's kind of like what we're doing with Sugi in terms of just taking this environmental impact data, which was previously only available for professional investors or financial institutions, and just putting it in people's hands and letting them make those choices. And then they can hold the institutions to account if they want to. So the pension funds they're invested in, or the asset managers, that's up to them. And it's kind of, I think a lot of people might dismiss the retail market because actually it's a relatively small section of the overall UK in financial markets. I think it's like 20% or something. But the number of people obviously is very great. So if they all act together and start, speaking not in unison, but kind of generally wanting greener behavior and greener investments, then actually that can be quite powerful. So that's the role, I guess.
Yeah, I mean, I think it's interesting. I didn't know you were going to mention the Bill Gates book there, Shruti, but one of the things he talks about all the way through it is the green premium, and the green premium is this thing, as I was alluding to, it's more expensive. We're not sure it will necessarily deliver, so therefore it doesn't get the money to necessarily to actually reach a wide group of people. So green hydrogen is the big example, whereby people say, this is something which is very expensive relative, per kilowatt hour versus other methods, but ultimately it's probably the least CO2 producing form of energy because it comes from electrolysis of solar and wind, but it's expensive. But clearly, if people, as happened with solar, if people get incentivized by our government to actually buy it, invest in it, the cost, the scale efficiencies come in, the cost goes down, And then obviously we start to get the benefit that we saw with solar. And obviously there were many bigger impacts, with China and Germany and the work that they did there. But this green premium comes through time and time again, I think, doesn't it? Through the book. I don't know if you've got that far through it, Shruti, but that was what was clear to me. We've just got to get the consumer and businesses buying into these things through incentives, and then the price will come down and we'll actually start to see the benefits.
Yeah, and I would say this is one thing that we try to talk about whenever we are talking to investors to invest in Novus, because we think it's a great idea. We keep mentioning that how this decade is supposed to be the decade of convenience, of purpose, when the last decade was the decade of convenience, and there's this shift on how we want to make more like purpose-based decisions. And investors also need to lead the way, where so far, like I went to business school a few years ago, and what we were taught was the single objective is short-term returns when it comes to an investor's goal. But that needs to be a bit more balanced on how we include a bit more metrics around sustainability and environmental impact. And even if that means slower growth, then that be it. And we know that consumers are ready for it. A lot of polls have said that the majority of users are fine paying a premium if their product is doing less harm to the environment. So I think it's time that investors also start thinking about it. And there have been, investors are demanding more metrics around sustainability and in climate change, on how climate change affects their business. And I think New Zealand has been the latest country that has passed a regulation around companies needing to show what they're doing to go towards being more net zero. So there are things happening in the right direction, but then again, the reporting part is so different, and like I said, like almost gaming the system, that we need to just have more better standards when it comes to reporting on like any of these metrics around sustainability. Otherwise, an H&M can say that we are sustainable, but the reality is that they're not.
Yeah, I mean, I think that's right, but I suppose I look, the narrative obviously is, we need to have a taxonomy, we need to know what color green is, shades of green, we need to have green labeling, we need to have standards, and all of that's true, but by the time we get all of that, it's going to be too late. So I think we do have to sort of get our FinTech mojo on here, and because there was a lot of that kind of conversation going on from the banks around open banking, and yet the FinTechs went out there and said, no, I'm getting what I've got. I'm either going to do screen scraping, and people said, well, screen scraping, all sorts of issues. Of course there were. But it started, building the muscle, getting the data, showing the consumer the art of the possible. And, Helen and I were chatting earlier on about our good old friend, Nick Ogden. Nick Ogden founded WorldPay. He then went on to found ClearBank, and he's doing it again now with RTGS Global. He doesn't wait for standards. He goes and says, there's a problem here. Are you okay if I fix it? And they go, well, we don't know how to do it, but if give it a go. We need the pioneers, as you both are, to basically say, I'll take what I've got and I'll show the art of the possible. Because I think humans fundamentally are herding animals. We're like a flock of starlings or something. We just see the other guy move, so we move as well. It looks like we're all moving in perfect unison, but actually we're just moving a couple of inches from the other guy. Show the examples, and away we go. And let's look at the examples in open banking. NatWest, big, lumbering, probably the most challenged organization through the financial crisis. They tried to do the innovation through open banking, didn't quite work, and then they set up their innovation labs in London, where they launched a whole load of products, said to people, use whatever tech you want, you build whatever business model you want. And everyone was screaming, we can't do that, we're a bank. And yet they innovated and innovated. They even failed on a few occasions, and they went, that's okay. I mean, that FinTech mojo, they learned finally, and even Alison Rose now, she's out there going, I'm going to be the #1 sustainable bank. Well, she may not be, she may be, but it's great she's saying it. Sorry, I'm soapboxing, Helen, I'm soapboxing. Josh, bring me back down to earth here. You know, do you think we need to wait for the standards, or should we get on and, you know, roll up our sleeves as we do in fintech?
Well, I mean, we obviously there is a direction that open finance is traveling, and you know, as a kind of member of that industry, Sugi is definitely kind of trying to support that conversation. I think, you know, it would be really useful if we did develop more in the direction of open banking, in terms of that kind of two-way street, that you have the information flowing into the aggregation apps, but you also have the ability to make payments going out. So it's kind of it's a conversation almost with the financial provider. And I think with open finance, it's really easy to see how you could kind of progress that in terms of engagement with your financial provider, whether that's sort of, you know, just kind of Q&A, or whether it's you kind of progress it. And I think I mentioned it earlier, towards more kind of, if there's some sort of way of implementing voting for companies you're investing in, or, you know, just feeding back to companies on their annual reports, for example, or asking them for more information about their CSR, or, you know, I can see the possibilities for open finance are endless in terms of supporting that kind of ESG mentality. Obviously, I mean, yeah, we'd like to push that forward ourselves, but it's you know, the kind of technology isn't quite there yet. I think we're going to be there, you know, in the near future, and I'm really pushing hard from the people I talk to as to kind of getting that direction. But it needs a lot of buy-in from across the industry and kind of standardization. So it's not just one company can make it happen.
That's true. I have spoken to a few startups, actually one whose name escapes me at the moment, but they are actually saying to people, look, if you want to use your shareholder rights, which you might think are, you know, nothing given the amount of shares you hold, you know, they give you the permission to sort of aggregate them, and that obviously has a much bigger impact in an AGM, and using sort of stewardship pooling kind of capability. So some extraordinary things going on out there. Let's think now, you know, as we head towards the sort of top of the meeting, you know, what are the sort of gaps and opportunities? We've spoken about a few here, but, you know, the things such as, you know, linking to the UN SDGs, Shruti, where are the gaps? Where are the opportunities? Where can we go with this?
Yeah, I would say the gaps are, like, we have been talking about it quite a bit, but just the way the information is currently available, just being able to find that in a more efficient and trustworthy way would be great for fintechs like us, so that we can provide that transparency to the end user. But the other thing is also how slow the big banks are typically when it comes to adopting a new framework. So even if, I don't know, open finance is available tomorrow and it gives us all the transparency, whether banks will adopt it and how many years they will take to get there is a whole different conversation. So it's I think that those would be kind of the big ones to me, to see a, you know, substantial change in the way things work right now.
Thanks, Josh.
I think I'd probably say the same thing, kind of, and I think I'd also highlight, you know, kind of the investment style API is there's still some room for improvement, I think, in terms of how we get the kind of the basic information down the channel from the investment providers. And there are some excellent brokers who do that, and there are kind of people who brokers which are kind of less engaged with the process of developing their APIs. So I'm looking forward to that becoming less of an issue over the course of this year. But yeah, I think in terms of the practical issues with open finance as it is at the moment, I think that's probably our main push point.
Yeah, I mean, I think, you know, we spent a lot of time talking about this on the Sustainable Finance channel on FinExtra, but one of the things that you have to be, you know, fair to the banks, etc., is they've never really counted this stuff. You know, they have actually just been looking at the financial analysis, the credit analysis, the reputation analysis. They haven't looked necessarily down at the environmental and the social and the governance. And the way they've gone and responded was the way they've always done it, is they've issued a report and said, fill that in, please. And of course, that's where people say, well, you're asking the corporate to mark their own scorecard. And then, of course, third-party data providers are obviously looking for contraindications, you know, looking at news feeds, looking at sentiment analysis to try and come up with a score. But the scores don't correlate between all the major data providers. So this has been one of the issues. I think one of the really interesting developments, which is complex, is that there's going to be this whole world of satellites and sensors, which is just proliferating incredibly, is going to be able to show people actually a lot more transparency of data from the material world, from the field, literally all the way through to the to the investment. We spoke to a company called Mantle Labs. What Mantle Labs were doing was using satellites. They had technology to actually cut through cloud cover. They were looking down into the fields, again in India, actually, agricultural, and they would compare with credit risk data, climate risk data. And they would say, on the west of this region, typically they're always good. They always deliver the crop. They're always good for their credit. But on the eastern side of the region, patchy, every 5 years, there's a problem. And what they did, therefore, was literally wouldn't send out collectors for the money into the eastern region in a drought year or a famine year. Now they're able to get much more nuanced using the climate analysis data from the satellites to be able to say, okay, no, I can really see that you should be able to pay, or you are good for credit, by combining satellite data, risk data, credit risk data, and obviously climate data. And that's delivering a real, in the field response, but also allowing them to build a better book of business, So I think there's some amazing technologies coming in that regard. Do you guys, have you seen any of those kind of examples out there of that sort of satellite sensor world coming into anything that you're doing?
From my side, I haven't particularly seen at the satellite level, but I have been hearing a lot more around in the fashion world, a lot more science happening in the material department on how either plastic is getting converted into actual textiles, or there is more engineering to make longer lasting textiles. So there's a lot going on, and there are like labels that tell you more about what that material is. So I've seen that happen a lot more on the fashion side of things, but not so much on the satellite aspect of it.
We'll keep an eye out for that one. I think, certainly where I hope that people that have listened into this conversation will go is they might say, well, I don't know about satellites and sensors, but I know how to, analyze good streams of data that come out of, the financial services industry. And if I can get a hold of that through open finance, I can now start to, apply my data scientists to it. I can apply my behavioral folks to it, and we can start to deliver this, insight on so many nuances. You can imagine the amount of apps. You could look at the E, the S, the G, by so many dimensions, by vertical industry, by financial instrument. There's just so many ways that we can shine light on this and make sure that we deliver a better outcome. I'm sort of thinking we're more or less coming to the end, but any last thoughts from you, Helen, before we wrap up?
Well, before we wrap up, I would just like to throw in a couple of questions. First of all, we should get our financial services mojo on, and that is, I think we need to copyright that phrase. You asked at the beginning, do we care? Well, yes, and I'm going to share the poll results in a moment, but I've just got two questions. Thank you, Miles Rogerson. He's saying, and Richard, you're going to be the expert here. How do you define a green asset? You could have, in the example he gives, an electric piece of mining equipment being used to mine coal. How would you decide which companies are green?
Yeah, this is actually, a genuinely difficult question, and that's why they talk about shades of green. So if you look at the EU taxonomy, I sort of said we've got to move on very rapidly, but the EU taxonomy tries to say this is how you define green, and it is about 52 shades of green. So therefore, you look at a Tesla for the consumer may be green. You look at the supply chain, and the work it does, maybe less so. If you look at actually where they're getting the minerals from, in terms of mining, maybe even verging on brown. So the truth is, you've got to be able, as you do with everything in the financial services world, you need to be able to weigh it up, look at the risks and the rewards, put it in its right category, and then say to an investor, right, this is basically this risk profile. Do you want to go with this or this? That, unfortunately, is where the complexity comes in for the consumer, who would rather make a more binary decision of just saying, I just want green, please, and I want to buy Tesla. It's more complex than that. But we've probably, as in all investments, have got to find a way of doing the institutional investor nuanced decision through to the consumer transparent but somewhat simpler decision.
Thank you. I personally would like to learn a lot more about this. So one of the privileges of having a global community, I would love to share some of that on our blog and start that conversation to a wider audience. I do have another question, and I think Josh and Shruti, this will be for you, but Richard, chime in, please. From Camphill, thank you very much. Is there any way to connect to the to test open finance environment to understand more about the ongoing changes? So we're saying get your FinTech mojo on. How do people get their FinTech mojo on? How can they connect? Too early, or do we have some practical answers, Josh?
Well, obviously, I'm going to throw in a plug for Sugi, which is available in beta at the moment. So if you want to look at your financial portfolio and see what the impact of your investments is, go to sugi.earth. But yeah, beyond that, I think you can. There are plenty of applications for open finance out there also that people can test out. There's I think there's Kinda, which just launched as well, with a lot of publicity. But I'm sure Shruti will be able to pitch in as well.
Shruti, go for it. Come on.
Yeah, I would also say go to novus.world and check us out for sure. We will have open banking as part of the app. We are not offering investments right at this point, but we will have open banking. And as George said, there are so many players in the UK. So if you're based in the UK, just Google some green fintechs that are in the market, and you'll surely find something that will interest you.
Thank you. And just before I do wrap up, there is, if I share some of the results of our polls, which we will be sharing on social media, you asked an absolutely key question. Would you back, and you've just touched on it now, would you back an ESG-led, over traditional investments if you knew it would lead to slightly less returns, but would help the planet? So less money, but we're going to save the world. The result, okay, or the last result I saw was 63%. So 63% of our audience would actually, if they knew, and I think this is the point, Richard, if they knew, they would actually back taking slightly less money over saving the planet. I mean, that should really give us all a lot of hope, okay? Then the other poll question, this is interesting. Do you think corporate and financial services businesses take ESG seriously? Yes, no, or don't know. Overwhelmingly at a 60%, no. So Richard, there needs to be a rallying call to get your FinTech mojo on, doesn't there really? And to maybe read Bill Gates's book. So that is a brilliant way for me to start wrapping up. Shruti and Josh, thank you very, very much for joining our panel. Richard, it's been an absolute masterclass. I promised everybody that at the top of our campfire. You have absolutely nailed it. In our briefing session, everybody was saying, we don't know if we're going to have enough to talk about. Rarely, and I do mean rarely, we like Swiss rail here. We've gone over time, but I just wanted, good things should be allowed to flow. And like all good wines, they should be allowed to breathe as well. Just a couple of thank yous from me. I would like to thank all of our sponsors for making this happen, particularly MasterCard, but also on this occasion, a big shout out to Railsbank, as Railsbank and Money Hub have both suggested the amazing panel that you've been listening to here. So all that remains now is for me to say a big thank you to my team, okay, the open banking team, your open banking excellence team, that work hard to put on this campfire, to create all the content, to follow on this conversation that we will be sharing on our blog. There you go, Giovanni, adding Lake Como, another plug for your blog, on our blog, through all our social media channels, and to our open banking pioneers out in Asia Pac and Australia. They will wake up in the morning and they will actually be able to download this and view it on demand. And that is generally what happens. So all that remains for me to say is a big, big thank you, Richard. This has been an amazing conversation, one personally I wanted to do, and by the audience numbers, everybody wanted to hear as well. So all that remains to me is to say thank you, and stay healthy, safe, and very, very green. Thank you very much.